Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news. Investor concerns about how much damage the US can do to China or the world on trade seems to be fading. But first, a report from the Bank of International Settlements said decades of falling interest rates have led to a sharp increase in the number of zombie firms worldwide, potentially threatening economic growth and preventing interest rates from rising. Another report has said that China has cancelled trade talks with the US after the US imposed its latest round of tariff increases. It's a move that was not unexpected. And it looks like China will win its anti-dumping case against the US at the World Trade Organization. Still no NAFTA progress, although Mexico has said it will do a deal directly with Canada if Canada can't agree with the US. But despite all this uncertainty, at the end of last week, world shares hit a more than 6-month high. Shanghai was up a remarkable 2.5%, and Hong Kong was up 1.7%. Other exchanges showed similar enthusiasm. On Saturday, however, the S&P 500 recorded no gain at all on Wall Street, and the Nasdaq actually fell. Early data for the US September PMIs shows another pullback in their expansion, with the composite index falling to a 17-month low. The same data shows prices rising faster. And Canada's overall inflation rate eased for the first time in 4 months to 2.8% in August, but another uptick in core measures of inflation suggests that further Bank of Canada interest rate increases remain on track. But the Brexit renegotiations are going badly for the UK, with the UK wanting a deal the EU won't even consider. The chances of a hard Brexit are rising. In Australia, ratings agency Standard & Poor's has upgraded their AAA rating from negative to stable, a multi-billion-dollar boost to income taxes on the back of bracket creep and high migration levels and company tax receipts through higher company profits have allowed the government to bring forward its expectations of a budget surplus to the 2019-20 year. On this side of the ditch, ratings agency Moody's has affirmed the New Zealand government AAA rating. The outlook remains stable. Standard & Poor's and Fitch both rate New Zealand government as AA+ stable, one notch lower than Moody's. And the US Treasury 10-year yield will start the week at 3.07%, and their 2-10 rate curve will start at 26 basis points. The Aussie government 10-year is at 2.70%, the Chinese government 10-year is at 3.71%, while the New Zealand government 10-year is also at 2.7%. And gold hasn't been able to hold its recent gains and has slipped back to $1,199 an ounce in New York, but almost the same level we were at this time last week. US oil prices a little changed today from yesterday and now just under $71 a barrel. The Brent benchmark is now just under $79 a barrel. A call by the US government for its friends in OPEC to cut prices has fallen on deaf ears. And the Kiwi dollar is starting the week firmer at 66.7 US cents and up more than 1 cent from this time last week. On the cross rates, we're marginally firmer at 91.8 Aussie cents and 56.8 Euro cents. That puts the TWI at 70.3 and almost its average over the past 3 months. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.